Hey guys, Adrian here. Welcome to my channel on passive income investing. And today I'm going to unveil what my dividend stock picks for the month of April 2020 are. So, very special month. There's the coronavirus market crash going on. So, let's get started right away. So, the first sector I want to concentrate on, should be no surprise, it got really hit hard, is the aerospace and aviation sector. So there's huge buying opportunities here. So most of the Canadian airline aviation stocks don't provide a dividend. So these are excluded as I only cover a dividend paying stock. So the first one, it's a company called Exchange Income Corporation. The stock symbol is EIF. So this is a diversified acquisitions-oriented corporation focused on opportunities in the aerospace and aviation services, equipment manufacturing. So the goal of the company is to invest in profitable, well-established companies with strong cash flows operating in niche markets. So let's check out the prices here. So the price ended on March 27th is $19.87 a share. So right now it's giving a yield of 11.47%, which is huge. And the 50, if we compare that to the 52-week high, it was trading at just a month ago or two at $46.10 and giving a dividend yield of 4.95%. So you could see here it more than doubled in the last couple of months. So, what are my reasons for choosing this stock? Well, the virus impact is reduced because they operate in more remote areas and not in leisure markets. They're also very diversified, and this is a dividend aristocrat. So, this is an amazing opportunity to own dividend aristocrat at a huge discount. Pick number two, also in the aerospace and aviation sector, is Chorus Aviation. So these guys provide regional aviation solutions. They basically own a fleet of planes that they lease out to other carriers. So their biggest client is Air Canada. They operate the Jazz brand for Air Canada. So the latest price is only $3.32, which translates to a yield of 14.46%. And you could see that's a pretty big discount, almost triple from the 52-week high, which the share price was 842, giving a yield of only 568. So these guys release a statement concerning the impact of the coronavirus, and they ensured shareholders that they have liquidity and are in a strong financial position to sustain dividends. So that's my number one reason. My number two reason is they've been paying dividends since the company's inception in 2006, so they have a long history of paying a dividend. So this is my pick number two. All right, guys. So the next sector I want to concentrate, it should be no surprise, it's the energy sector. So oil and gas, they've been the hardest hit sector from the coronavirus because of all the travel restrictions. So this lowers the price of oil dramatically because there's no planes in the air right now. So oil prices are currently at their lowest level in 40 years, under $25 a barrel, which is absolutely crazy. And on top of that, as a double whammy, there's the oil price war going on with Saudi Arabia and Russia. So for those of you that don't know what happened, OPEC, or the biggest oil producers in the world, recently had a meeting, and they were trying to figure out, the numbers to lower. Everyone lowered their output so they could keep the price of oil stable, but it went completely awry. And basically, what happened is Russia refused to lower their output, and Saudi Arabia retaliated by increasing their output. So they did the opposite, and this further lowered the price of oil. So all energy dividend stocks are at a huge discount right now, some at 60 to 70% or more. Especially the lower and riskier producers are trading at humongous discounts. So my pick in this sector, number one pick is Enbridge. So Enbridge is the biggest energy company in Canada. They're a multinational energy transportation in Canada. They focus on the transportation, distribution, and generation of energy. So they're a midstream company, and the recent price is for one share is $38.37, giving a dividend yield a really crazy of 8.44%. So as you could see from the 52-week high, it was 57.32, only giving a yield of 5.65. So a big discount here for a very safe energy company. So my reasons is pretty obvious. It's the biggest energy company in Canada. They have strong liquidity. They're a midstream company, so they're not as impacted as much. regarding the low oil price, and they are a long time dividend aristocrat that keeps raising their dividend every year. So this is a really great opportunity to get this really steady and safe energy company at a really good discount. A similar company, it's called Kiera. So this is also another midstream company. They concentrate on the transportation and processing and storage of oil. So the recent stock price is $12.19, which gives you a dividend yield of 15.75%, really good. And the recent high price is $36.56, which only gave 5.25. So this is basically you're getting triple value here again. So this is another dividend aristocrat. They're even more safer than Inter Pipeline, I would say, because they raise the dividend more often. And of course, it's a midstream company, so they're less impacted by the price of oil. So my last pick in terms of energy is going to be an ETF. So if you don't want to get an individual company, getting an ETF is a good alternative for safety. So the Harvest Energy Leaders ETF has basically the 20 biggest companies in the world. So there's 58% is US, 22% Canada. So the recent stock price is only $1.90 per share, which translates to a dividend yield of 18.95%, whereas its 52-week high is it was at $4.77 and a yield of 7.55%. So this is safer because you're not buying an individual energy company. It only has big cap energy stocks, so they tend to outlast more the smaller producers during bad times, during oil price declines. And I mean, the dividend cut might be coming in on the fund, but I mean, even if it's cut in half, you'll probably get near 10%. So another ETF, if you want to look at another one with no exposure to Canada, a good alternative is an ETF called NXF. That's the symbol. It's managed by the CI First Asset, and they have a yield right now of 15%. So basically, we're spoiled for choice here, guys, in terms of the energy sector. We have a lot of big cap Canadian dividend aristocrats to choose from. So we can expect some dividend reductions, especially from the non-midstream companies, which have a bit more exposure to low oil prices. But either way, it's really, really great value. So I listed some here. There's Enbridge, which is the biggest energy company in Canada. TC Energy, this one has been the most resilient so far. And then you have Pembina Pipeline. This is another midstream like Inter Pipeline and Keyera. I would say this is the safest out of the three, but the yield is a bit lower. And then you have some really big producers like Suncor and Canadian Natural Resources, which is also a good choice. So this is, I had a thought that, after the pandemic is over, are there any companies that might benefit? Well, there's a possibility that healthcare and medical equipment companies will see a surge in business. If we just think of it logically, we've seen a lot of news around the respirators and the missing equipment all around the world. So there's a good chance countries all around the world will make big medical supply purchases to be ready. So it might be good time to invest in healthcare companies or funds. So I put a few options here. These are my two favorite ETFs that I have in terms of healthcare companies. So the first one is by Harvest. This one has 20 big cap global healthcare medical companies. And then you have another one that's managed by Brompton Funds, which is called the Brompton Funds Global Healthcare ETF. And it has 25 big cap global healthcare and medical companies. So a lot of the same companies are in both of these funds. It's up to you to really choose. So that's another idea I had concerning the COVID-19 pandemic here. And basically, guys, everything is on sale. It's a crazy time right now. There's a recession is more than likely due to the pandemic. Stocks in all sectors are at a big discount. I know I concentrated a lot on the energy sector and the aerospace sectors. These are sectors that have been hit really, really hard. But basically, all the sectors, the whole stock market is on sale now. It's the biggest buying opportunity in 12 years. So since the 2008 recession, we need to remember the legendary words of investor Warren Buffett, we need to be greedy when others are fearful. So this is exactly the time that he's talking about. So happy hunting, guys. I hope you enjoyed the video. Please like and subscribe. If you have any questions or concerns, or if you have any tips or stock picks of your own, let me know in the comments section below. I would love to see them. So thanks a lot for watching, guys, and see you next time.